Good morning, everybody. Welcome back to the channel. My name's Max Convexity. This is the Daily Covered Caller. It's Friday, the 26th of July. Let's see what we're going to look at today. Why don't we? We'll look at the heat map as usually. Oh, and I also wanted to mention to y'all, I wrote Howard Chan an email, and I'm trying to get him back on my show soon. He hasn't responded yet, but I wrote him yesterday. I got a good response from my KQQ video, but I would really like to have him on because my video also raised some new questions that I would love to ask him. Of course, we're always going to talk about the Defiance trade, the Yield Max trade, as well as the Tesla crash pairs trade. We'll also probably take a look at my new buffer report. I just saw somebody wrote in the comments the KQQ was down 4% already. Is that true? Anyway, we'll look in the buffer report and try to get to the bottom of that. I couldn't imagine. Well, I mean, on the other hand, the market's been pulling back yesterday. Yeah, it probably was because the market pulled back yesterday. It probably was. But anyway, we'll see. I want to see what it's doing. I forgot to do the buffer report yesterday. So we'll get in the middle of that. Up, the triple indexes are up triple, of course. Even Bitcoin's up today. Risk on is everything's up. Today's everything rally, right? What's down? Volatility. I mean, USO. I mean, oil's down. Other than that, semiconductors. This is leveraged. It's leveraged inverse semis. So yeah, of course that one's down. Everything bullish is up today, pretty much. Okay. On to the Defiance trades. Let's just look at 5-minute max. All right. So if you look over here in the left column, whatever's in green means it's outperforming its benchmark. So triple QI is outperforming NASDAQ today. That's great. Triple QI is up 83 bips. NASDAQ's only up 81. Not a huge difference. JEPY is underperforming its benchmark, which is SPX. You can see here USOY, even though it's down 1.5 points, it's outperforming its benchmark, which is USO, which is one of the few ETFs that's actually down today, right? We just looked at that. These are the strike prices. These are the points in the money. In any event, the index options are all at full profit right now, which is good news for today. This is what they're making today. The next column is how much they've lost on the month. The triple QI has had a hell of a bad month so far. You can see it in the earnings per share, negative 50 cents. For triple QI, JEPY, negative 32 cents. The other hand, IWMY is positive 32 cents. Here's the dividend estimates. They've come up as the market's pulled back. Volatility has become bid. It's jumped. And so they've been able to sell the daily puts for more money on a daily basis. They're monetizing that really short intraday and daily volatility that the funds that do the monthly options just miss out on. So it's a source of income the other guys don't get. Okay. So in any event, those are all doing well. So let's go over here. Let's talk yield max. Let's start with Tesla. So Tesla's the yellow profit boxes. Tesla is a bullish Tesla fund. And you can see Tesla was going straight sideways and then just broke out. And it started breaking through all the yellow profit boxes. Now, the red profit boxes is an inverse fund called Crash, a bearish Tesla fund. It's also a yield fund. Well, in the past couple of days, Tesla's turned back bearish, and it has actually jumped over Crash's strike prices. Crash sells covered puts. Tesla sells covered calls. In any event, it hasn't jumped over by very much, and they're both doing pretty well. So I made a spreadsheet. I'm trying to let's take a look and see. Just at a glance, we can see the change for the pair. If you have both of them together, there's people that are trading Tesla and Crash, holding them in equal portions, and collecting a dividend from both of them, but also being bearish Tesla and bullish Tesla at the same time. So it has elements of being delta neutral or market neutral. And it also, it's also not a bad idea for a yield fund, because even on the inverse Tesla, the covered puts, those pay a yield as well. You're getting a yield from both sides. So the blue line is the since inception return of the NAV. The red line is when you include the distributions. So far, there's been $4.08 of distributions, and this fund's just been out 2 months. They've received about 13% of the investment back just in distributions. But the NAV of these has been pulling back, and when you include the NAV with the distributions, the total return's down 10.55%. But I imagine as time goes by and they keep collecting more dividends and more dividends, their total return will go up. All right. So we also have the same situation with Coinbase. Coinbase has a bullish fund, which is yellow boxes. That's called Coney, and a bearish fund. That's called Crash. Or I'm sorry, not Crash, Fiat, F-I-A-T. Well, this security, Coinbase, is behaving if you own both of these together, and it's staying right between them. So that's good if you have both of these together. I don't have a spreadsheet for Coney and Fiat yet. I'll try to have that done by Monday. Let's look at MSTR, which is MicroStrategies. The high yield fund's name is Misty, MSTY. Misty's been doing great. They have a covered call right here at the 1670 strike. It got blown out early in the week, and they never did roll it. They were using the prayer method. Just pray the price comes back to you. And the price did come back yesterday for a while, and now it's jumped the fence again, so to speak. Anyway, that's fine. They're at max profit for this week. These guys are, Misty's a good fund. These guys are having a great time. We'll look at Misty, how Misty's doing in the buffer report here in a second when we look at that. All right, so now let's check NVIDIA. The high yields fund name is NVIDIA, NVDY. This one's fine. NVIDIA's pulling back, but the covered call part of the strategy is doing great. 3 strike ladder, everything's great. We'll check advanced micro devices, AMD. The chart looks the same. Big tech has been pulling back this week, but the covered call part of the strategy is going great. Not really much to see there. And Amazon's going to look exactly the same, of course. They have a 3 strike ladder. So all these options that are way out of the money on these ones that are pulling back are going to expire or worthless today. And this premium is going to be, the managers are going to receive all this premium. So in any event, it'll buffer some of the pullback that we've seen in the stock. Not all of it, but it'll give a partial buffer. Okay. So now let's do this. Let's go to Google also. I forgot to look at Google. All right, there's Google. Google has a 1 strike ladder way up here. Oh, and also, did we look at USO? I don't believe we did look at USO. Yeah, okay. Now USO is right on the cusp. This the break even is the bottom line of this option. Okay, and this option expires Friday. So let me draw this to scale. So that's what they have left in the day. So they need to get it back to here, and they'll back in the green, and there won't even be a loss. And the top line of the box, or of any profit box, is max profit. The top line or above of any covered call strategy or short put strategy, income type option trade, is max profit. Okay, so now let's look at the report. Okay. All right, so here's the new buffer report. So I had a comment that said KQQQ was already down 4%. Well, anyway, I guess right now it's down, 7 bips, or the benchmark's up. Let's look at this. KQQQ owns all this big tech, and big tech's been sucking, so probably is down 4%. I don't really follow these on a day-by-day basis. To me, these aren't trading vehicles; they're allocation vehicles. But yeah, I mean, I guess down from 25 to 20, down 80 cents the first day is, yeah, that's probably where the 4% is coming from. Yeah, it is down 4%. It's a great fund, though. I mean, the market goes up and down. I like the fund strategy. I like KQQQ strategy. I think they're going to kill it. But I mean, any of these funds, the fund has to have an underlying, right? USO's underlying. We just saw USO. Their underline's oil. All right. Well, oil's pulling back today. So yeah, they're writing covered puts or short puts on oil, and it's great business and it's money making thing. But their asset they're writing the puts on is pulling back today. That'll make the NAV of the fund pull back. These things, these covered call strategies and short put strategies don't exist in a vacuum. You can't sell a short put on nothing. It has to be on an asset. When you sell a put, you have to promise to buy the asset. So anyone that's selling puts in USO, like the USOY fund does, that means they've promised to buy shares of the USO ETF. Okay, so if so that's why, and that's why if it's, let's see, all right, this option they wrote was a 77 strike option, right? Oh, it's a 77.5. They received about $1.50 for it. Okay. So they're on the line to buy this asset for 77.5. Now, since they've received $1.50 for it, they're essentially on the line to be long the asset at the difference between 77.50 and the $1.50, because they've received the $1.50. So really they're making an obligation to be long at 76, which is 77.5 minus $1.50, right? So that's their net effective. That's what they're going to have to do. All right. Well, the 76, that's why I'm always showing the line down here. Where does this line go to when they receive $1.50? It starts at, if I drew it right, it should start at 77.50 like that and go down $1.50 to 76. Then that way, that's how it gives you a visual representation of how the fund's doing. That's why you can see, hey, the fund needs to rally back to this point on the chart for these guys not to have a loss, which is right about 76. Okay, and it's doing that right now. But, you have to sell covered calls or short puts, which is the same thing as a covered call, on an asset. You can't just do it into thin air. So that's what causes the NAV decay and erosion that everyone's so worried about. That the NAV decay and erosion is a little bit of a misnomer. That's just the market pulling back. Okay. It causes what appears to be decay or erosion. I mean, that's the way it appears, but true erosion is something different that happens to different funds. Look at this. Anyway, it doesn't matter what you call it. We all know what it does. All right. So USO right here, they just pulled right to break even. Markets. So if USO can keep rallying and they can get up here to this top line, okay, remember the people wrote the 77.5 strike. So if they can get to this top line or above, the option will expire worthless. And the $1.50 they received, they'll just put it in their pocket and they don't have to buy any USO shares. And then they'll just sell another put. They just sell puts every day. When these expire, they'll sell another put. You can see what they've been doing here. They follow the market around. Market turns around and starts going up and they're selling puts behind the market or, with the market, and the market starts going down and then the puts are on the other side. But they're just trying to follow the market around and sell puts to earn a premium wherever they can. All right. So here's what everything's down today. And here's what their benchmark is down. So here's a chart of it. ULTY is killing it. One of their stocks, they hit it big, which is great. That is awesome. ULTY is the fund of the day. Everything looks pretty good. I know I don't have everyone on here, and I'm still not happy with this. I just wanted to put a few things up here to take a look at. But yeah, you'd have to say KQQQ is the weakest. You are the weakest link, KQQQ. iSpy doesn't look great. It's early in the day, though. Lots of these funds aren't all that liquid and don't trade that much, and these quotes may be still and may not actually reflect how they're doing. So just like everything, kind of with a grain of salt. All right, guys, I'll let you guys get out of here. You guys have a great day.